Hi, everybody. Welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. We're just hopping back on here to give you an update on the price action that occurred this past week, just kind of a look back on that, as well as give you an update on my position here using our True Alpha Trading system. Again, this is the system that we teach from the main course that we offer at truealphatrading.com, which is our website. And again, these updates are just to give you a look over my shoulder to show you how I'm utilizing that system here in my live trading account. Again, everything that you're going to see here is an allocation to that trading system. So again, this is a good way to test drive and just see exactly how I'm implementing this system and using this system to both position myself and manage my risk against the major indexes. And I'm trading against the S&P 500 here in this case. So again, this system and the way I'm positioning myself here and the way that I'm managing risk here is entirely based around price extremes. So I'm not using fundamentals, I'm not using technicals, I'm not using macro, right? I'm not using news headlines. There's none of those kind of indicators or tools that I'm using to position myself or manage my risk. I'm entirely positioning myself and managing my risk around price extremes. And that's really important to pick up here and to see that what I'm doing here is I'm basing my expected outcome of the position that I have on here. So I've gone in, I've set my position, and now on a week to week basis, I'm looking to make some adjustments if the market gives me some opportunities to do that. But overall, I've positioned myself to capture a distribution of risk and reward around a very wide range of price extremes. And so I've painted my distribution of risk and reward. And all that I mean by that distribution is just an expected outcome in terms of return or gains to the upside and risk to the downside. So I position myself here and I manage my risk knowing full well what the outcome is going to be basically at the onset of this position. So I know what my return is going to be and I know what my risk for those returns looks like. And that's stretched over a very wide range of price extremes. Okay, so all of my position here is already stretched across such a wide range of price extremes that whatever drives this next week move or the week after that's move is really kind of already baked into the position and the way that I've distributed my risk and return using this system. Okay, so let's go ahead and just kind of jump in here and take a look at this. I'm going to zoom in on my position right here. Again, the yellow arrows here are capturing last week's price action. And if you'll see here, what I have highlighted here is the candlestick here that shows the close on the Friday before this past Friday. So that was August 14th, and the market closed right at 7802.50 on the S&P 500 futures here. Then we had Monday, Tuesday, Wednesday, Thursday, Friday. We saw a little bit of a bounce only to close at 7687.75 on the S&P 500 futures. But what you'll see overall over the course of last week, we basically sold off slightly over the course of last week. So that move lower over the course of this past week was a move lower of 1.47% on the S&P 500 futures. So I just want to point out here that the move that we saw this past week, this 1.47% move lower, okay, that my position was already allocated and my risk and return here, or risk and reward, was already positioned around this, right? Because at the end of last month, when I placed my position for this month, as you'll see here in a little bit, already accounted for this type of a move, just like it already accounted for last week's move and the week prior to that. So I didn't make any adjustments. I didn't make any trades trying to capture or predict what the market was going to do this past week. I just want to be in a position where if the market's going to move like this over the course of this past week or this big move that we saw higher a couple weeks ago, that I'm in a position to benefit from that. Now, you'll see that I did give up a little bit over the course of this past week because the market did move lower. But all in all, what I'm pointing out here and showing you, and just want to reiterate, is that I'm not looking at technicals or fundamentals. I'm not basing any trades trying to predict this move that we saw this past week. Just like I'm not going to sit here and claim to know what's going to happen this next week, right? I just want to be in a position here where I continue to capture the move to the upside if we do continue rallying higher from here, while keeping my risk in check to the downside if we do continue to sell off into the coming week. But again, I've already positioned myself around a wide range of price extremes here to capture, or at least know where I'm going to stand based on this kind of a move, right? And so again, you'll see that here in just a second when I update you on my position. If we look back to the blue line here, this is just marking where we closed at the end of last month. So you'll see down here on the bottom, this was July 31st. We closed at 7503.50 on the S&P 500 futures. So from where we closed at the end of last month to where we currently sit, we are still higher here on the S&P 500 futures, which is also going to correspond to the S&P 500 index and many of the S&P 500 ETFs that track the S&P 500. But we're sitting here at a month-to-date return of about 2.46% higher on the S&P 500 here. So what I'm going to do now is just double-click and back out to zoom in on this right here to show you where we are on a year-to-date basis. So this candle here marks where we closed at the end of last year. So December 31st of last year to where we are sitting currently at this point in time, right? So where we closed last Friday on August 21st, okay, the move higher here on a year-to-date basis is a move higher of about 11.52% on the S&P 500. So still sitting higher here overall on a year-to-date basis, and we'll see where this goes. You know, we could sell off heavily from this point. That wouldn't surprise me, just because we have been sitting at all-time highs and moving into new highs over the course of this year. So, you know, if we sold off from here, that really wouldn't surprise me at all. And because I wouldn't be surprised by that, that's also need to be factored into my position that I'm carrying, right? And as you'll see here in a little bit, that is factored into the position that I'm carrying. At the same time, we could bounce off of this level of, right, if you were looking at technicals here, you might look at these previous highs that we hit over the course of the last few months from where we broke out. We have come down. We're sitting right at the top of that level. So from a technical standpoint, maybe you look at this and you say, well, you know, this looks like it could be a level of support that we're ready to bounce off of and continue moving higher here on the S&P 500. Well, that may be true. Again, I'm not positioning myself or doing anything here, placing any trades to try to position myself around that technical level of support, maybe, right? If you want to pretend like that's there. But you'll see with the position that I'm carrying that I'm also positioned here to capture the move higher if we do continue to rally from this point. Okay, so I'm not a trader or investor that pretends to think I know what's going to happen next, right? I've been humbled enough over the course of my trading career to know that I have no idea, just like no one else knows what's going to happen over the course of this next week, right? Despite whatever news headlines, despite whatever reports are coming out, despite whatever the Fed may do next, nobody really knows what's going to happen over the course of this next week. Okay, so let's not pretend like we know what's going to happen or where the market's going to go from here. Okay, well, I'm not trying to predict that or state that. I'm saying quite the contrary here. What I want to be sure of, though, is that I'm in a position where I'm going to continue to benefit from the market if it moves higher, while at the same time keeping my risk in check here if we do see a substantial move lower here on the S&P 500. Okay, so what we'll do now is we'll click over to my position and I'll show you how that looks and maybe that'll help some of this make a little bit more sense whenever I'm talking about my distribution of risk and reward here. So I'm going to click over and show you that now. Okay, so this is the position that I placed at the end of last month. It's the position, really the base position that I will carry for this entire month of August. And so what you'll see here is, the core position, and this section of my position, these are the inputs, these are the actual contracts and shares that I'm carrying for this month. Okay, those are what are really driving the overall distribution of risk and reward to my position here that you'll see here in just a second. And the main thing that I want to point out here is that these are going to be the main things driving the risk of my position. And that's really important, in my opinion, is that you're always able to quantify and know what your risk is, right? How much you actually stand to lose to the upside or downside at all times. And then over here, you'll see that this is another portion of my position that just kind of enhances this. It's really what drives the hedge to my position, where you'll see here in a little bit, so that if we do see a substantial sell-off over the course of this month, I do have a hedge that kicks in here to help me lose less than what passive exposure to an index like this would otherwise put me in a position to realize. So this is the base position that I'm carrying for this month. These are the inputs that I placed at the end of last month for this position. So I'm going to back those off of the screen now and just scroll down here to show you, okay, these inputs drive the way that I'm positioned here, as you'll see on my screen. So over here again on the left, you just have straight percentage moves on the S&P 500 futures. So this is just showing you where the S&P futures will be based on the percentage move that you see here. So if we move higher on a percentage basis, it's just showing you where the futures will be relative to that percentage move. Okay, same thing to the downside. You just have, just a straight percentage move here. If we move lower on any percentage basis, it's just showing you where that's going to put the S&P 500 futures here. More importantly, my position is structured here so that it moves lockstep with the S&P 500. So it's going to show out beside it here where if we do get a percentage move higher, where that's going to put the cash in my account at any point in time. So that's what I mean, where I know at all points here, based on any percentage move you want to play with here, I know exactly where my cash in my account's going to be based on that percentage move, anywhere higher or lower on the S&P 500 here. And I keep that front and center at all times as I both position myself on a monthly basis or as I make any adjustments to manage my risk on a weekly basis. Okay, so we closed right at 76.87. So right in here on the S&P 500 this past week. And so you'll see that that should put the capital in my account right between 207 and 208,000 here, which you'll see out beside that here, that's a 2.24% return on a month-to-date basis. Okay, so if I clicked back over and showed you my account again, or if you rewind here, you'll see that I'm sitting right about that level. I'm actually sitting a little higher than that because there is some extrinsic value that's going to burn out of my position over the course of this month. So as of today, I'm sitting a little higher than what's indicated here, but by expiration at the end of this month, that if we just set at this level, or if we closed right here at this level, then all that extrinsic value that I have in there today should burn out of the position over the course of this month, and I'll be sitting right here at this point, okay? The thing that's real important, again, for me is to always pay attention to whether I'm trailing or outperforming the S&P 500 or whichever index I'm trading here. In this case, I'm trading against the S&P 500, okay? And the position that I took here shows that I should be expected to trail the S&P 500 by about 0.25% if we were to close right here at the end of this month. And I'm okay with that. Okay. I wouldn't have taken this position if I wasn't okay with that outcome at the onset of this position. Okay. Now you could come in here and you could use our online tools and you could use this system to tweak this whole distribution, right? Carry a very similar position to what I'm carrying here, but tweak it so that your distribution, you're not trailing the S&P 500 by so much in this case, or maybe you're not trailing the S&P 500 at all, right? Maybe you're outperforming the S&P 500 within this range here. But that's what I'm saying, and that's the beauty of this system, is that you can really kind of customize it and tweak it so that it really captures the overall distribution that you want for this month, let's say, or that really captures your tolerance for risk overall. And you can pair it with the S&P 500 or the NASDAQ or the Russell, any of those major indexes. Okay, we give you the tools and we teach you how to pair your position in this case with any of the major indexes, just like you see me doing here. Okay, so I'm pleased with how I'm positioned here to the upside. Again, if we do continue rallying in here, what you'll see is that I'm going to continue capturing most of that move to the upside. And to me, as I'll reiterate here, one of the things that you really don't want to miss out on are some of these explosive moves to the upside, like we saw just a couple weeks ago, right? And so, at least in my opinion, that maybe some of the biggest risk takers out there are people who are sitting on the sidelines, or they're short the market and they're not capturing some of these big rallies to the upside that we've seen this year and in prior years. So I want to be in a position here where I'm capturing most of that move to the upside. But if I scroll down here, you'll see that I also have this hedge that kicks in for me, where if we did see a substantial sell-off to the downside on the S&P 500 here, you see that I have this hedge that starts kicking in for me that's just going to come in and mitigate what would otherwise be just a one-for-one loss with the index if I didn't have this hedge kicking in for me. And again, this is by design. So I know at every point, if I scroll down here, if we had some kind of just wild move to the downside, I can come in here and see exactly where my hedge is going to be kicking in and how much it's actually hedging my position to the downside based on the position that I'm currently holding. And again, if we do see a substantial sell-off at any point in this month, that's where I'll come in here and I'll look to make some adjustments, really overall to close the gap here and improve my overall distribution to the upside becomes the priority to me in here. So that's a look at the position that I'm currently carrying. Again, you'll see I didn't make any adjustments this past week. I left everything pretty much as is. And again, I like the position that I'm carrying here. I'll continue to benefit if we see a continued rally to the upside, or if we did see a wild sell-off from this level here. I like the hedge that I have that kicks in and helps me just have a little bit more of a dynamic position if we do see a sell-off or any kind of a substantial move to the downside in here. So that's an update for you. Hopefully this is helpful to you. Again, so we'll be back here next week with an update just to take a look at this coming week's price action and what my position looks like at that point in time. With that, I hope you have a wonderful week, and we'll look to catch you here next time at True Alpha Trading. Thanks again. See you soon. Bye-bye.